Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, and this is the 21st of August, 2018. As you can see, the grain market's down. A combination here of still pretty good crop conditions, good weather going into the end of the growing season, not a lot of fears on these crops as to what a frost might do at this point in time. And of course, you got the pro-farmer tour going on, and the word coming from the areas they're covering are mixed, but nothing that is super bullish. So that's weighing on the market. And of course, we still don't have a trade deal done with China. And from what I'm reading more and more, it doesn't look like anything in November is really coming about. Now, that could all change tomorrow with the meeting that is set to begin on trade with China in Washington. But that November meeting between the president and President Xi, they were going to meet anyways at a conference. So I don't know that that's something new. When we go to the weekly area chart, you can see how the beans have come up, but they haven't run away from this upside pattern. The market off the lows is 60 cents, which is impressive, but in and of itself doesn't match anywhere near that big break in price from $10.50 down to the $8 level. As you can see on this chart, we had a rally, and as I pointed out yesterday, if you were watching, I said this whole band is resistance, as the market had gotten into yesterday, and today the market thrown back from that band. The pattern, however, is still impressive. It's still encouraging because you have a pattern of higher lows and higher highs, which is friendly to the market. When I put the 18-day average of closes on, please notice that for the past 1, 2, 3, 4 days practically, the market has been trading at or near that 18-day average of closes, trying to figure out what it should do next. The market was not strong enough to get up to the upper Bollinger Band. The lower Bollinger Band on this test back here supported the market, and I think what we have now is a market that is looking for direction and doesn't know what to do with it. In terms of momentum, the momentum has gone flat. It has not turned down. It just flattened out, as you can see right here, as measured by the slow stochastics. Obviously, upward momentum looks like that, downward more an area like that, and you can see some more downward areas that occur in that manner. Now, when looking at the meal, part of the problem for beans is that the meal has taken leadership to the downside. It now has a pattern of lower highs, lower lows, had that on the close yesterday, and as it's coming down, momentum is picking up and still pointing lower, so this market might be ready to challenge the lower Bollinger Band. What's impressive to me is that the market has got all this sideways action as measured by the black and lower band, which are an algorithm designed to keep the market trading within it. Now, eventually, from sideways action, trends develop. You had a sideways action pattern up here, and when it broke, you can see the action that occurred from that part. Doesn't always have to break. It can break out to the upside. Soybean oil fits right into that pattern as well. You can see the on the black lines, the sideways action. It's the reverse of the meal, which it often is. In this case, it's bullish. You've got basically a low here that was under this one, but now with the outside day up today, this is now the low here that I watch. If this is taken out, by the way, today's low, which was 28.61, be it on Wednesday or Thursday, this will be called a bull trap, or the market has reached its upside target, and you probably head back down for another test close to, if not those lows itself. I'm not saying that will happen. That's the what-if scenario. Assuming the market doesn't do that and it stays bullish, 29.30. is the next upside target in the market, the upper Bollinger Band. In the corn market, the trend has turned to the downside. Lower highs, lower lows. We don't know yet where this low is going to end up. It could be that the market's getting in gear to challenge the 370 area. I know in our research department, a lot of people are thinking corn in the 360 area has a lot of intrinsic value. In the wheat market, the wheat has got a pattern of a lower low, then a higher high, and a new lower low. Do you see how that worked out? you're not going anywhere. You're just spinning around, taking traders for one heck of a ride from 528 rather up to 563, back down today to 526, all in very quick order. For those of you that used to trade pork bellies, wheat at this time of the year is like a pork belly market. It just goes every which way at once. Bellies no longer trade, by the way. I'm not saying that about wheat at all. You need wheat in a much bigger way than you need the pork belly, which is bacon. I ate bacon like mad, by the way. In looking at the sugar, lower highs, lower lows, and embedded reading. So on the rallies, until that red line gets over 20, I am looking for the sellers to come out and force and keep selling this market on the rallies, trying to see how low they can push the market. In the coffee market, if you look at today's settlement at 101.80, it got back over the lower Bollinger Band. It had yesterday a day under it, as you can see, at 195. The day before that, you finished under the lower Bollinger Band, the day before that under it, and the day before that. So you had 4 days in a row. So often I tell you, the market rarely goes to that fifth day, and today it didn't. It popped back over the band. By much? No. It's a very bearish situation still in the coffee market. In the cocoa market, yesterday was the day where the market had set up. It had a pattern of higher lows, higher highs, but yesterday it closed over the 18-day average. The key was, would it pull back today to that 18-day average and let traders in? And the reality is it missed it by just a fraction. Believe me, 21.74 just missed in this low part here, and the market then continued on, and now I'm looking for the resistance at that upper Bollinger Band, and you seem to be right on top of that. In the cotton market, you lost the opportunity to keep the embedded slow stochastic. So the first target, and I'll show you this again, when you lose it, the first target becomes the closest of one of the key averages, the 100 or the 18-day average. The 100 is 84.22. You haven't hit it yet, but that still is the target on the market. Are you trending? The answer is no. You got a lower low, and with today's action, a higher high, and now you either go back and re-embed tomorrow only, or you get more of a correction as the market works off being oversold. In the cattle market, I'm going to stay with what I've said. It is, I think, the best thing. You got to be careful of this cattle on feed report. It has a way in the October report of moving things around. But more important to me, I want you to pay attention how sideways the market has been going again in these Bollinger Bands. That is the pattern markets eventually create a trend from. You don't quite have that in the feeders. What you have in the feeders is a pattern of higher lows, higher highs. You've pulled back for 3 days to that 18-day average, sort of trying to hold it and figure out what next is going to happen in the market. And momentum has disappeared. Now you're just drifting sideways in momentum. In the hog market, the market corrected yesterday under the Bollinger Band, broke a little bit more today. Now, a lot of the rally that's been built into this market has been hope and prayer that our pork exports back to Mexico and to China will pick up again from the U.S. We know that China's under a severe problem with their swine flu, plus with the soybeans that they've had to replace from the U.S., they've paid a premium. And a lot of the farmers there are not producing hogs at the profit they thought they would, which is creating a problem for the market because, unlike America, these aren't really free markets. If you think so, go study what's going on there. You know, the state tells you what to do and how you've got to do it, and some of the farmers are now in problems. So as I look at the markets, an interesting time. I'm not even talking here in the agriculture update about the two verdicts that came in. Actually, one verdict on the Paul Manafort case and the other verdict, obviously, having to do with Mr. Cohn. But I am going to talk to you about our guide to technical indicators. If you watch these videos, you obviously like the indicators. Well, they're all laid out here and more in a way that's a PDF on a link that we send you. How do you get the copy of this? It's really simple. Either call us at 866-973-2077 or go to our website, www.iraepstein.com, sign up for it there. Or you can click up here if you're watching me on YouTube and it'll take you right there. I'm Ira Epstein. You have yourself a great day, and I'll talk to you tomorrow.